So the housing market is headed for a big shakeup after the 9 largest firms when it comes to real estate market research has changed their tune. So are we headed for a big giant reset? Is this a replay of 2008? Let's see what the big guys with the research have to say. And I'll put my 2 cents in there because I can't help myself. At the end of 2022, home prices started to finally decline. We saw 7 straight months of home prices declining from June to January. So when they headed into 2023, the analysts had said that we're going to continue to see home prices continue to go down. But then February came around and they rose 0.2%. So did the predictions. They adjusted as well. So what caused the home prices to go down so far and then all of a sudden then come back just a scotch? Well, it's the problem that I've been saying forever is the lack of inventory.
The issue is not so much demand, but supply or lack thereof.
Even though mortgage rates continued to go up, as they leveled off into the low 6s, the demand for homes still went up. And if you're in that affordability range, if you're in that affordable housing, the lower than the median cost of a home, those homes have never stopped selling ever. And at this point, they're actually still going through bidding wars. That's what's causing them to readjust their predictions. Not all of them are on the same page, but CoreLogic, one of the biggest firms when it comes to the real estate market, they're expecting it to rise another 4.6% from March 2023 to 2024. That would be the whole United States market. 4.6% rise in home prices is actually above what I would consider even a healthy market. 3% right now, I would think that would be healthy. If it actually happens the way that CoreLogic says, we're going to look at home prices that are still entirely too high for affordability, which is the biggest problem right now when it comes to the housing market. CoreLogic is even saying that the home prices are going to be back to the levels that they were at the height of the market. So anybody that's lost some equity, they're saying that they're going to get it back. They're also quoted in saying, while housing markets across the country continue to send mixed signals, prices in many large metros appear to have turned the corner. And that's from their chief economist, Selma Hepp. While I agree some markets are going to turn the corner, there's still many in the West Coast that are seeing rapid declines. If you look at some markets like Las Vegas, Phoenix, Arizona, Austin, Texas, we have the biggest adjustments in price. But if you also look at those markets, those are the ones that had the most construction.
Now, the home builders we saw this week, you'd think they'd be stepping up, but they have not been as much as we might like.
If you have a limited amount of new home construction in your area, you're probably not going to see the big price cuts that you're hoping for. I will say that builders are giving a lot more incentives now, which is a big giant plus. Thank goodness. While CoreLogic is pretty optimistic with the 4.6% raise, Zillow isn't quite as optimistic, but it's still optimistic at 1.7% increase from March 2023 to March 2024. Now, Zillow's economists have said it's turned back to a seller's market. I know that's not something you want to hear, especially if you're looking for a home, but this is what they're quoted as saying. April data indicated that the housing has returned to a seller's market. Buyers flock to open houses at this time of year in hopes of securing a home in a time to move in early summer. And the reason why you're going to see a lot less listings than you would in a normal spring year is because a lot of sellers have secured very low mortgage rates. So they're not willing to either move up or move down because of the fact that their mortgage payment would be so much more. I mean, if you were having a 2.5% interest rate on your mortgage, why would you get into a new mortgage at like a low 6 rate? Unless you had to move, there would be no reason for you to try to sell your house right now. And this is one of those things I've been saying for many months on my live streams, that no one's going to sell if they don't have to. But that's what a lot of people have been saying on my live streams. What about the foreclosure rates? There were so many people that took the forbearance. Isn't there a huge spike in foreclosures? And if you read the headlines right now, yes, it looks like there's this huge surge of foreclosures. But if you actually look at the charts when it comes to foreclosures, it does look like there's a giant spike in foreclosures. So you're hopeful. But if you look at those numbers even closer, they're nowhere near the numbers that they were prior to the pandemic. And I want to warn everybody, when it comes to foreclosures and you seeing those rates, that does not mean that there's going to be a lot of foreclosures that hit the market. A lot of times when you see foreclosures on the books, banks go ahead and sell them in bulk to other investors. We never even see them hit the open market. So it may look promising, especially if you're looking for a good real estate deal. Most likely, you'll never, ever see those houses with for sale signs in front of them as a bank foreclosure. Now, I will say this as a tip. If you are looking for a foreclosure in your area, almost every single area has a real estate office that is connected to just foreclosure properties. If you're looking for a real estate agent that is a specialist in foreclosures, I can connect you with them. All you have to do is go to my website, KristinaSmallhorn.com. Zillow.com. Now we have two research firms that are saying, yes, we're going to see an increase in price. Some research firms that are saying that we're going to stay flat. And the research from Bank of America says we're not going to gain anything. It's not going to be in the positive and it's not going to be in the negative. Just remain flat, which is what we saw a lot of last year. Apparently, Bank of America is thinking that's how it's going to continue all the way from March 2023 to 2024. Their economists are quoted as saying, we project a flat growth for 2023 as we reach close to equilibrium levels in terms of constraint of affordability, meeting reduced supply. But there are areas for them for concern, which I mentioned earlier. Phoenix, Arizona, Austin, Texas, and Las Vegas, the three I just mentioned. So that's what Bank of America had to say. But what did the Mortgage Bankers Association have to say about it? They're a little less optimistic as they think they're going to be falling about 0.6%. And by March of 2024, they're saying it's going to drop to 1.4%. But it expects the home prices will be on the rise once again in 2025 to rise another 2.1%. So they're saying there's going to be a little dip in 2024, but it'll rise again in 2025. Where's the crash that everybody's been talking about? Let's see what Fannie Mae has to say. Fannie Mae says we're going to be dropping 1.2% in 2023. We're going to be dropping another 2.2% in 2024. But that's actually an upgrade from what they had said previously because they thought it was going to be another 4.2% in 2023. So that's a big change. And this is what they're quoted as saying. Housing demand and home prices have proved more resilient than previously anticipated. This is due in large part to the lock-in effect, in which existing homeowners are de-incentivized from listing their homes from potentially giving up their mortgage rate. Now, Fannie Mae was quoted as saying is they weren't really anticipating the resilience of the housing market, mostly because people didn't want to give up their equity in their homes. And they were thinking that more people were going to be forced to sell, especially since the Fed kept coming out saying that they were trying to tamper down inflation by eliminating millions of jobs. While the Fed does keep increasing the inflation rate, jobs have not been cut like they were hoping they would. Even Jerome Powell even had said in the past that he thought that home prices had gotten out of hand with affordability and that increasing the inflation rate would create more affordability because people would have to give up their houses because they lost their jobs, which was crazy to me. He didn't say it in that exact words, but that's pretty much what he said. But as you know, the job market continues to go up. Those numbers come out every month and they still are ticking up. Unless the job market absolutely tanks and lots of people start losing their jobs, we're not going to be seeing home prices go down significantly and we're not going to be seeing rental prices go down significantly. There's going to have to be two factors. One, we're going to have a lot more supply on the market. And two, a lot of people are going to have to give up their homes in order for those prices to come down a lot. But that's just my 2 cents. I told you I would be giving you some of those. I can't help myself. While Fannie Mae has adjusted their rates from 4% to 2% this year, Morgan Stanley has still maintained that there's going to be a drop in home prices at 4% by the end of this year. The Morgan Stanley housing team published a forecast, a drop in home prices, something that is also underpinned our general optimistic outlook for both the customer balance sheets and customer spending in the post-COVID recovery. Lack of supply has been the main factor underpinning home valuations, meaning a lot of people bought houses during the COVID period and they're not selling now. That's why homes are maintaining their price. If we had the same supply of houses that we had in 2008, you would see home prices dropping a lot faster than they have been in some of even the hottest markets that saw the biggest declines in the last few months. For most of the country, we just don't have enough supply of homes, especially for those homes that are under the median price. One of my favorite research firms when it comes to analytics is Moody Analytics, and they don't have much of an optimistic viewpoint when it comes to the housing market. They're thinking that it will drop another 8.6%, and they just updated that forecast of May of 2023. But Goldman Sachs has adjusted theirs to say 6.6%, and they made the most significant point, which I've been trying to scream from the rooftops if anybody was listening to me. They said housing affordability has been the key determinant of regional home prices variance. Even with falling treasury yields, affordability levels are underperforming and Western markets remain very poor. In their view, metro-level home prices will be more instructive than national home prices when monitoring mortgage credit stress. I had to look up the term metro-level home pricing. I never heard this before, so I asked ChatGPT. Don't laugh at me. I know I'm a real estate agent, but this was a new term to me. I live in a rural town. So let me explain what it is to you. The term metro level prices refers to the housing market conditions and price fluctuations within a specific metro area or cities. It implies that the real estate data trends are more localized scale rather than considered as an average aggregate prices across the country. Instead of trying to look at the home prices as a national scale, we need to look towards more localized areas, which makes total sense because not every housing market it's the same. Here in Baton Rouge, Louisiana, it's nothing like the housing market in California, and it's nothing like the housing market in Orlando, Florida. So we need to be looking at this not as with a broad brushstroke. We need to be looking at this as centralized local markets. And that's how you need to be determining if your housing market that you're either moving to or moving away from is in trouble. That's why it's always important to work with a local real estate agent. They're going to know the market better than anybody. To my point, KPMG actually broke it down in regions, and they said that the West is experiencing the largest price and declines. Home prices in San Francisco, San Diego have fallen sharply, but remain out of reach for most home buyers. The Midwest is forecast to see flat to modest price growth in 2023, as most markets, Cleveland, Indianapolis, and some of the other cities that are still attracting many buyers. The South still remains in high demand. We're looking at Atlanta, Charlotte, Tampa, Fort Myers, and Miami. Florida is on fire. They're still seeing record home prices, still continuing to go up. No reduction in price. This KPMG article is probably one of the best I've seen. It's got all the charts and information so you can look at your specific region, and then you can decide for yourself what you think is actually going to be happening with the housing market. Do you think that the housing market's about to be completely reset and we're going to see home prices drop at least 8% like some are predicting? Or are we going to see more of like home prices increasing no more than like 1.8%? So let me know in the comments section below. I know this always is a hot topic for people. To watch more videos about affordability and why we don't have enough homes on the market, you're going to want to watch these videos right here. My name is Kristina Smallhorn, your real estate whisperer, and I tell you all this because good real estate information matters.